Hello, everyone. I want to thank Kallanish firstly for the invitation. Today's virtual conference, I would like to cover a few topics. Firstly, is about the overview of the Asian steel market, including the key issues and challenges, the shift in the supply landscape, India, which is the next big wave that we are seeing, emerging capacity in the ASEAN steel industry situation and its implications, and steel price trends and mills margins. And lastly, will be the conclusion and the key takeaways. So I'll now kick off with a quick overview of the Asian steel market, including the key strategic issues and challenges. Now, as most are aware, we are now experiencing a further surge in steel prices and a supply shortage. We believe that the uptrend will continue through Q3 of this year, but it will be probably at a slower rate as compared to the last 3 months, and it's mainly due to the Ramadan and other seasonal factors. So, with regards to the steel prices, Formosa Steel, the leading hot rolled coil producer in Vietnam, and the company that everyone is watching with regards to hot rolled coil pricing, have announced their June delivery price at US 910, which is a very significant increase compared to previous months. We are also seeing a very big jump in other products prices, such as slabs. It has now hit 800 to 820 from Russian origins. And hot rolled coil from China has also increased to around 930 to 950. The other areas like plates, we are seeing a price now of 850 to 870. And for cold rolled coil, it has surged to 1050 to $1,100. We are also seeing a very big increase in GI for automotive from Japanese mills. Prices we heard has hit around $1,500 level. And PPGL in Thailand domestic market by the leading domestic quotas has now reached 1,700 US dollars. So you could see that the prices that we are seeing today is almost close to the 2008 level. But we believe that prices will remain strong through to Q3, and with a potential of further steady price increase to the rest of the balance of this 2021. Next, which I'd like to cover is the ASEAN countries will still enjoy global demand throughout second half of this year. But midstream manufacturers, such as the cold rolled coil producers, the leading quotas, result will be lower due to margin compression from the increase in steel feed prices. When I say margin compression, it means it's still they still will be enjoying a very healthy margins of maybe around 15% EBIT levels as compared to around 20% currently by some steel producers. There's also a very strong demand from automotive and home appliances manufacturers across Asia, and is driven mainly by strong demand from USA and Europe for white goods. Now, we are also seeing China home appliances manufacturing has increased 165% year on year, and is mainly on air cons and dishwasher. So next is about the ASEAN building and construction companies. These sectors are now experiencing difficulties to absorb the rapid price increase. And this is also compounded by higher labor costs due to COVID-19. The aid and safeguard measures in some of the ASEAN countries, particularly Thailand and Malaysia, has also exacerbated the problems for the ASEAN and construction companies, which I will elaborate further in the next few slides. China, we are also seeing China to continue importing billets, mainly competitive scrap prices. Scrap prices in China has hit almost $500 levels. And last year, China imported about 6 million tons of billets, which is a very significant jump. There's also more, we are expecting more exports from India for this year, mainly due to the pandemic and also the monsoon season, including increased capacity from the Indian mills. Political problems in Myanmar. Like this is the news that we are hearing almost every day with regards to the political problems. What we see is that we should not expect a quick solutions because this tragedy rather will take some time to resolve. The good thing is, I think we are confident that the parties such as the NLD and the military will eventually have to come to terms to reach an agreement to have a good outcome for the country as a whole. We are already seeing people going back to work, and certainly we see that there's good opportunities for local steel producers, such as I think JFE Maranti, to take advantage of the situation because they are world-class producer. They are able to provide short lead time, and all these COVID-19 problems plus the bitterness against Chinese imports certainly augur well for a company like JFE Maranti. The other issues that we see is that those companies who are a joint venture who has partnership with the military, they are the one that is going to face difficulties on how to extricate themselves from these current joint ventures. Now, the other good thing we have identified is about the rising demand for EV cars, and we believe in ASEAN, for the years going forward in ASEAN, EV manufacturing will increase year on year, and we have already heard Hyundai Motors have set up EV manufacturing in Singapore, and so this will be the trend going forward. The other point which I'd like to talk is about a fragmented steel industry, which I will elaborate further in page 9 of this presentation. This slide talks about hot rolled coil exports from China. You can see that it has declined quite significantly from 2018 through to 2022. And we believe that the exports of hot rolled coil will decline further in the years ahead as China get up towards green steel manufacturing. But India will then virtually fill the gap, and we have identified that India producers are now encroaching stronger and stronger, especially into the Vietnam markets. You can see from this slide, there's a significant shift in the supply landscape, whereby India is now one of the has taken quite a large share of the market share in the ASEAN countries. So GDP per capita, what is showing us here is that India, Indonesia, and Myanmar have got the lowest GDP per capita of steel consumption in the ASEAN countries. So what it implies that there's a lot of opportunities for steel investors to invest in these countries, in particular Myanmar. India. We talked about India earlier. Indian steel producers have now made a very strong mark in the ASEAN market, including China, including Europe and the US. Now, so So what we are saying now is that India will get stronger and stronger. The volume from India will only increase in the years ahead as Indian mills ramp up their capacity, and Chinese mills, on the other hand, will be retreating year on year. And I will not go through some of the points that I have highlighted in the slides. And these are all due to the issues, especially in China. But what's more important in this slide is for the Indian producers to be able to establish trust and confidence to the customers in these regions. And that's something that I hope I can elaborate further in the Q&A session as to why I mentioned this point. Now I'm going to talk about the future capacity in ASEAN. As you can see that the future ASEAN by 2025 in the next 4 years will increase from 83 million tons to 144 million tons. Now, this certainly is a very significant increase. As to whether the local market could absorb this significant increase is quite questionable. So on this slide, you'll see the Chinese mills. I will just go through very quickly. These are all the mills that have established operations in the South Asian region. I will not go through one by one, but what's significant is that most of the plants here are owned by China. So we term that as a Chinese mill transplants. So what's worrying is that most of these new operations, the owners are either not geared or unwilling to invest in breakthrough green steel iron making technologies. Now, this certainly will create problems in the years ahead in terms of carbon emissions. And that is a strategic issue that the ASEAN government as a whole needs to address. So this is a problem that I think we'll be talking again in the years ahead. Now, this slide is, I think, very relevant to a lot of people in terms of making informed decisions. I have mentioned earlier in my previous slide about the steel prices. So we are seeing, as you see, the PPGL price for the local producer in Thailand now has hit $1,700 level. And hot rolled coil is, we believe, will hit 1050 in Q3 and 1150 for cold rolled coil. Now, what's significant to note is that Chinese hot rolled coil producers' EBITDA now is about 23% in March of this year. This is a big jump as compared to, say, January this year, whereby the EBITDA is something like 12%. So, in short, a lot of steel producers, most steel producers are in a honeymoon period. They are enjoying tremendous, significant EBITDA. And what's driving the steel prices is mainly due to the Chinese domestic market demand is very strong. It's compounded by a capacity cut in Tangshan and many other provinces. And that will result in a reduction in export availabilities from China. There's also a lot of these talks now going on about the cut in export rebates. And if that happened, that would certainly put Chinese offers at uncompetitive levels. Although some may say that the price increase that we experienced in the last few months have already factored in the announcement of the export rebates. Raw material prices, we believe that iron ore prices will remain strong, including coking coal, and the continued strong demand from the home appliances and the automotive sector will certainly boost the further consumption. The other factors is about the rising freight rates. It has jumped up significantly, and that's something beyond steel producers' control. So lastly, everyone, I'd like to highlight about all those issues that I have mentioned earlier. So what must ASEAN authorities and the local producers do to stay relevant? Now, all these trade protectionist measures that we are seeing now is not going to augur well for the local producers in the longer term. And we believe that the government should stop attracting low value added foreign investment, as per some of the points that I mentioned earlier. First generation technologies transferring to this region is not going to help the country as a whole in terms of the efforts to reduce carbon emissions. Now, the government should also help investors who are willing to invest in breakthrough green steel iron making technologies. This is happening in most of the North Asian countries, and why is ASEAN lagging behind? This is something that most don't understand. And the government also as a whole should start helping local producers to develop truly sustainable competitive advantage. This is also the message that I'd like to give to the local producers, that in order to stay relevant, they must really look at the way they operate. So in short, in the steel business, it's all about establishing trust and confidence with our customers and suppliers, managing production volume, robust supply chain, consistent competitive pricing, supported by consistent quality and services. So an example that I like to highlight below is mainly just invest in long-term relationship and ensure that we deliver true value enhancement in customers' experience, establishing trust with loyal customers who have deep emotional attachment to our brand. And lastly, it's about people, creating a people-focused company. With all that, if we are successful in all that, it would ultimately result in a very strong brand with a sustainable competitive advantage. This is the end of my presentation, everyone. Thank you for listening. I'll be happy to take on the Q&A session later on. Thank you.